Bitcoin is pausing. It paused yesterday. It paused today. Watch to see if we get one more move up into this level. I would not be surprised based on how it's trading right here. If we get one more move up and kind of get up to 113-ish, give or take, on the chart of Bitcoin.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Gareth Soloway breaks down stocks, Bitcoin, gold, silver, and oil. Big moves ahead. Let's hear his expert take now.
It's not to say that we're going to see a huge rise in inflation, but again, when you jack up tariffs by, let's say, I think there's an average of 12% across the board, at some point, we all have to admit that the companies themselves are not going to eat that, right? As much as Trump might push them to do that, it's very unlikely that they will eat those tariffs. They're going to pass it along to you and me, and we'll see that in prices over the next 6 months. GameStop reported earnings yesterday. Their numbers were not great, but remember, this company is trying to reinvent itself by buying Bitcoin. And so again, while the stock is down a little bit, you can see here initially it sold off, and then again, it kind of has chopped around here. It is down a little bit, but there's no day trade here for me. It's not a big enough fall, especially since it has recovered substantially. You have kind of a framework for a deal with China. We're getting rare earths again. We're kind of on, you'd assume, better terms with China than we were a month ago. So that's a positive. Then you look at the inflation data. That was better than expected. That's a positive. Today should be like a 1% update on the S&P. If by chance, listen, if it's up 0.5%, doesn't matter. I mean, that's kind of in that range. If we're flat on the day or negative, that's where I would say ding, 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 ding. Something here is now not behaving as it should. We could be looking at a bigger move in the downside category coming in the market.
Bitwise CEO Hunter Horsley believes that once Bitcoin crosses the $130,000 mark, selling pressure will disappear almost entirely. In a recent post on X, Horsley stated that at those levels, few if any long-term holders will be willing to part with their BTC. The reason? Those still holding are deeply committed and increasingly see Bitcoin as a store of value rather than a tradable asset. Currently, Bitcoin is hovering near its all-time high, trading around $108,000. Horsley explained that the current wave of selling mainly comes from early adopters who bought Bitcoin at extremely low prices and are now locking in profits around the $100,000 range. But he believes that phase is coming to an end. As Bitcoin pushes past new price milestones, that old supply will dry up. The bigger picture, according to Horsley, is that future Bitcoin holders won't need to sell at all. Instead, they'll leverage their assets by borrowing against them through the growing world of crypto lending. This behavior, he argues, will shrink available supply even further. Supporting this view, industry voices like Michael Saylor and data from OTC desks show that Bitcoin availability is tightening. With only about $50 million worth of BTC entering the market daily, even modest demand can significantly move the price upward.
The futures barely budged. All right, now why is that important? Well, historically, if you go back the last 3 months or so, any trade news, especially with China, would see the S&P futures spike up. We didn't see that last night. This morning, all right, if I flip back to the charts here, right here, we had more news about the Chinese deal. It's going to include magnets and rare earths. The U.S. in turn will allow students to come to the U.S. The tariff rate on China will remain at 55%. The markets initially kind of popped, then dropped, and are stabilized right here. All right, so again, trade news, and this is something I've told you guys before, right? We've talked about how trade data and news is becoming less and less important because the markets are becoming more and more immune to it. It's just like, hey, listen, this is more white noise. Yeah, there's a little bit of a positive here, then there's a little negative here, then there's a threat here, etc. The markets are becoming more and more immune. What the markets are looking for, though, is economic data, Again, how strong is the economy? Friday, the non-farm payrolls number came out relatively strong compared to estimates. But again, what did we see? The last 2 months revised down by almost 100,000 jobs. And so it was kind of a neutral report. I would call it neutral. Again, the headline number was good, but then if you look at the underbelly, the participation rate was lower as well. Participation rate, when it goes down, that's not good because it tells you people have been looking for jobs and they're finally starting to give up and taking themselves out of that unemployment number, right? So again, that's an issue as well. Gold had popped initially here on the back of that number, but now you're seeing risk on for the stock market. So we are seeing gold pulling back again. So remember, in general, and listen, this has been kind of interesting, right? Because generally, when the stock market goes up, what does gold do? Gold goes down, right? Because people say, oh, well, why do I need to hold gold? It's a safe haven asset when things are crazy, but the stock market's going up. So I might as well take money out of gold and put it in the stock market. So generally, gold falls during periods where the stock market's been rallying. Now, if we look at the chart on gold's daily chart, it hasn't, I wouldn't call it falling, but it's been going sideways. So normally gold would do this, right? From basically the beginning of April right here, gold would go like this. But instead, it's been basically chopping sideways. That to me is bullish for gold. The chart remains with a breakout above this level. But just the mere fact that gold has gone sideways, like if you look at, so the low on gold, or I should say the market's bottomed on April 7th, right? April 7th. This is where the stock market bottoms on this date. And look at what gold's done. It's actually net green, even though the stock market has rallied now. I think the S&P is up like 25% off of its lows. NASDAQ's up like 35%. So that is very unusual. And that speaks to, number one, that central banks and governments continue to buy gold like crazy. In fact, just this last month, China bought another massive amount of gold. But also it just tells you that even though the market rally is continuing, there's a certain group of investors who are like, hey, listen, the party can't go on forever. Load up on gold because it's most likely going higher.
Peter Brandt, a seasoned trader with decades of market experience, recently suggested that Bitcoin could follow its 2022 path and crash by 75%. While the comment stirred the crypto space, many analysts believe this scenario is highly unlikely in the current environment. Swift's lead analyst Pat Hundle responded by saying the macro landscape has changed significantly since the last major crash. Back in 2022, Bitcoin dropped from its $69,000 high to around $16,000, a brutal 76% fall. But that period was shaped by COVID stimulus aftermath, over-leveraged markets, and major collapses like FTX. Today, things look different. The Federal Reserve's monetary stance has softened compared to the aggressive tightening seen in 2022, and inflation appears to be stabilizing. Analyst Andy Edstrom pointed out that while a correction is always possible, the kind of deep double-top drop we saw last time hasn't appeared. He also noted that the 2021 cycle was distorted by external shocks like FTX's implosion. Meanwhile, sentiment on the ground doesn't suggest euphoria, a key sign of market tops. Analysts like Colin Talks Crypto and Michael Saylor argue that Bitcoin still hasn't reached its peak. Saylor was especially confident, declaring that the crypto winter is over and Bitcoin is on its way to $1 million, not back to $26,000. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.